What's up, traders? It's your boy Vincent, aka Vin Boss. Welcome back to the Vin Boss Signal Factory, where real traders grow real accounts. Vin Boss Signal Factory is where we are building a community of real traders, people who trade smart, stay disciplined, and grow real accounts with real strategies. Traders have been trading the markets for years now, studying price action, understanding structure, helping traders master consistency. Everything I share here comes straight from real market experience, not theory. All right, let's jump straight into today's 6 YouTube free analysis. And traders, with that being said, before we get into this, first thing that we have to do and understand is that joining the Vinboss Signal Factory is very simple. All you have to do is register your account with us, our partnered broker, which is XNS. The exclusive link will be left under this video description. Verify your account details and fund the minimum of $20 or more right before the year ends of 2025. From 2026 onwards, we will be going back to the minimum requirement of funding the minimum of $100. Now, after the registration, you send proof of registration to admin at 068 060 5332 on WhatsApp. I repeat, 068 060 5332 on WhatsApp. That's when you will be added to our Telegram group and WhatsApp group after the proof of registration and funding. So traders, without wasting further time, let's go. Before we go anywhere else, let's firstly understand what we have in store for us coming into this week with the fundamentals. Firstly, the first fundamental that we have is the GDP. That will be Monday, right after the Monday the market opens. And with that being said, traders, this will only be affecting those who are in the real account traders community. You are missing out because right here on YouTube, you're only getting euro dollar, pound dollar, euro yen, excuse me, not euro yen, euro and the Canadian dollar, pound Canadian dollar, euro and the pound, and last but not least, the US dollar and the Canadian dollar. The Japanese yen pairs are only being monitored by the real account traders community with me and the rest of the community. So this is going to be Monday, and Tuesday is going to be what we call a silent day, but continuation of the market is still going to take place. And with that being said, on Wednesday we do have good market movers on Wednesday for the CPI of the pound, both together with the euro, and this is where the US dollar is going to start moving from 5:30 with the crude oil inventories and the FOMC minutes coming in later on. And right here on the FOMC minutes is when the market is going to decide the direction of what is going to happen. And with that being said, traders, we will have this on Thursday, the Philadelphia Fed Manufacturing Index and the existing home sales on Thursday, and then on Friday, Standard & Poor Global Services Manufacturing Index and Global Services on Friday. These are going to move the markets and mostly the dollar right on from Wednesday to the beginning of the markets. Now, without wasting further time, traders, let's go straight to the markets and see what it does have in store for us. Now, as you can see, I've already started adding value to the 6 YouTube watch list, which is by starting with the DXY and understanding the strength of this dollar index and where it possibly might take us going into next week. So with that being said, the only time I will be selling this, even though the weekly structure is still favoring sales from this level to the downside and this level to the downside, the only time I will be selling is if we do break strongly below this level of 99.00 and then coming back with a pullback, and then I'll be looking for selling opportunities right at this level right here, and then to continue down I'll be looking for bearish patterns and formations to continue to the downside to make that 1:3 risk to reward ratio to the downside. Now let me get to why, even though this is still structured to the downside, but why I will be looking for buying this going into next week. Now, with that being said, traders, I do have, or my bias is to the upside. Why? because of the daily liquidity. So this is what I do want to see. I would like to see this continuation coming down, maybe retesting even this low without breaking it to the downside, and then looking for buying opportunities from this level, and then a continuation to the upside will be a fantastic setup to go with. Now, traders, with that being said, this would be a fantastic setup also. And let me show you this on the bigger time frame. This is what I do believe in. Now, with that being said, this is another place. If this does not hold, if the 50% Fibonacci retracement does not hold, then we might go to the 78.6%. This is where we will be looking for buying opportunities also. But the overall direction is to the upside. But if we do get a break, remember, if we do get a break and a pullback within this week that we are going into and find bearish patterns and formations right here at 99.0, then this is when I will try to continue, maybe to go to the 78.0 or even break out of this bullish momentum. Because if we do reach this level right here, this is where I will start thinking of selling and continuing selling, or the bias of this structure will be now shifted to the downside. So that is it from the euro and the dollar. Let's go from the DXY. Let's go to the currency pairs itself, and this is where you'll find that there is inverse correlation between the DXY and the euro and the dollar and the pound and the dollar. Firstly, let's start with the euro and the dollar. And essentially with the euro and the dollar, what we do have is, simply put, I do want to see this to the upside, but under strict and certain conditions, because of the level that we are sitting at on the daily time frame. Now let me clarify this again, just as I did clarify it on the DXY. Now I do want to see this potentially breaking above the levels right here at 1.1655, right? And then coming back to retest these levels, look for bullish patterns and formations right here, and then a continuation to the upside. This is what I would like to see only if I'm looking for buying opportunities. But since I am also reluctant on buying this, I also want to sell this based on the daily time frame, of which I can zoom out right now and show you what I am referring to. Now, for me, this is structured to the downside. We still have not yet breaking to the upside, and through the upside with the euro, we are still structured to the downside. Now, what I would like to see happening in this market right now is a continuation to the downside, or a retest of this 1.1625. This would be a great place to look for selling opportunities, as it is the 78.6 Fibonacci retracement. And as you can see, it has reacted once, twice, and even formed a bearish pattern right here. Reacted again 3 times, and we have formed a new low again. Let me clarify this and put it maybe on a much bigger, a zoomed version of this chart. Now, we reached the 678.6 Fibonacci retracement, reaction to the downside, of course, movement to the upside. We did a bearish pattern whereby we have a lower high and a lower low, and then the market came back straight, shot up this, but the sellers came again and made a new low high again. Now, what do I want to see? Maybe one last push to the upside, and then a continuation to the downside to reach out or to close out on the daily time frame, which is, we are going, it's up to you. If this materializes, guys, it will be up to you if you want to keep it up until we reach to this level, or it will be up to you if we will be taking this week in and then week out and then another week. This is how it might unfold. Maybe 3 weeks going to the downside, or even 2 weeks, or even 1 week if it goes strongly to the downside, depending on the FOMC. We have just seen that on Wednesday we will be having the FOMC right later on, and Jerome Powell will be there giving us the volatility as we know him to be. Okay, so without wasting further time, traders, this is the euro and the dollar for us. And with that being said, beautiful traders, let's go straight to the pound and the dollar. As we can clearly see, this is also reflected on the pound and the dollar. With what you can see is struggle to continue to the upside. And even if we can just zoom out and check this out, in here what we do have, it's very different from the euro and the dollar. The euro and the dollar similarly is closer to here, and we are still looking for bearish patterns and formations before it can even invalidate this sellers block here, and then we can now say that we are buying. But in here, because we have a strong momentum to the downside indicating the weakness in the pound, this is where last week we've just reached the 38.2, making this a valid pullback, because anything that is 23.60 pullback, I do not regard it as a pullback, right? So with that being said, do I think this might happen, that we reach this 50% Fibonacci and then a continuation to the downside? Yes, I do. But also, I would be very careful in this because of the weakness in the pound. I would also be looking to continue to the downside and even below the level of 1.3009. Now, with that being said, let me zoom in and show you guys what I think buyers should be looking for this coming week. If you are a straight up buyer and not a seller, this is what you should be looking for. Another retest of this level right here of 1.31400, and then bullish patterns and formations, because you've seen this before. You've seen this before. This level was holding for sure, and continuation to the upside will be imminent for you to make enough, even though it is not 1:3 risk to reward ratio, but it was enough for sure to get you guys to the buyer's side. So with that being said, traders, this is the expectations from this week to next week to go to the upside if you are a buyer. But if you are a seller like me, if you are bearish to the downside or structured to the downside, you should be looking for selling opportunities once we get to this level, continuation to the downside. And don't worry, next week I will be back every single day to make sure that I am here with you traders, mentoring you on a daily basis to show you what happened on the price action versus what I was expecting, and how do I adapt to that, or what happened that went in our favor going into next week. So traders, with that being said, let's jump straight to the euro and the Canadian dollar. And traders, with the euro and the Canadian dollar, what we do have is very simple. If you are a buyer, this is a great place to look for buying opportunities. Of course, if you do start from these levels, this would be a great place to look for buying opportunities to take out this and make a new high right now, or hold for continued movement to the upside. Or if we do get a deeper pullback right here, this will also make a great place to look for buying opportunities to the upside, as to make this one out for the short-term bullish outlook that we do have right now, and it is valid as the last 2 weeks that we had these signals. Okay, but also this is still, as you can see, as you might have noticed this small line that we do have right now, which is this yellow horizontal line right here, that is at 1.6327. 1.6327. This is a great place to look for selling opportunities in a daily time frame. So with that being said, which is why me personally, I will not be looking for any buying opportunities right at that time. I would also rather be looking for buying opportunities if we do get the break above with a strong momentum and a pullback to come and retest this, or rather again this 1.6327. This would be a great place to look for buying opportunities to make out that 1:3 risk to reward ratio. This would be perfect going to the upside. Remember, for you to master trading, you have to welcome the opposite wave that is coming against you so that you can stay calm throughout all market conditions. But if you try to force something else into existence, or if you're trying to force your opinions on the market will humble you. So without wasting further time, traders, let's get into this. Now, number one, this is the third currency pair that you see reacting with bearish patterns right at the daily liquidity, which the first pair was the euro and the dollar. The second pair was the pound and the dollar. Now the third pair is the euro and the CAD. I would like us to go straight over. Before we do that, let's get into this and show you firstly what. Let me show you. This is what I do see this as. I see this as one wave, right? And I see this as A, B, and a C, and a continuation to the downside more imminent as we do get bearish patterns from here. This is a daily outlook on the euro and the Canadian dollar. This is the aspect of it. This is what I see. For those of you who are doing wave analysis, this will make sense to do to those who are making or who are following the wave analysis. But on this weekly Forex forecast that we are dropping right now live, this is what I'm after, or this is what I am looking for. I do not think this is structured to the upside, but if we do get a break to the upside like this and then a pullback, then I'll be looking for buying opportunities to continue to the upside and take out structure right here at the seller's block at 1.6465. This would be a great place for me to take out profit only if this setup plays out like this. But if it does not plays out like this, or it just comes down and retest the second place again, or for the second time it retest this liquidity zone, then selling opportunities will be very much likely ready or more possible to happen, as the euro is somehow sitting at the liquidity zone against the euro and against the Canadian dollar. Let's go and see the pound, what it's like, or how it is positioned, or what the structure is. I do not want to be part of this, as I might get trapped into the inverse head and shoulder. I don't want to get trapped into this first leg, as we already know the inverse head and shoulder already has a pullback before the continuation of the other or the second wave coming. So this first wave, I don't want to be trapped in it, because I still believe it might come down and make this an A, B, and a C, and then a continuation to the downside. So if this is truly confirmed, then the second wave will be there to cover it on a daily basis. Remember, I will be giving out the daily videos every single day. So with that being said, traders, let me love and change this currency pair, go to the euro, to the pound and the Canadian dollar. And traders, with the pound and the Canadian dollar, it's very similar to what the pound and the dollar is doing. Lack of volatility to the upside and a lot of nothing else for the past 3 or 4 hours. So with that being said, traders, what do I want to see going into the market? Now, if you are a buyer, which is structured to the upside for buyers, if you are a buyer, this one would be a great place to look for buying opportunities and then a continuation to the upside. But me personally, I am not a buyer up until this happens. I am not a buyer up until we do get a break above and then a pullback to retest this 1.85200, and then look for buying opportunities, of course, and take out profit with 1:3 risk to reward ratio. But bullish patterns and formations will be found around this 1.85200 area around here. So this is my bias only for buyers. Or if we do not come and break that, instead what we do is we just come and we retest this level right here. I'll be looking for selling opportunities to make this new low. Why? Because this is the daily liquidity that we do have, and I might have already told you before that the pound is weak and I would like to sell it again going into next week. So traders, with that being said, it's very simple for you to see this. And if you do not understand, ask questions here on WhatsApp or here on YouTube on the comment section. I will gladly answer all your questions. And this one is okay. Out of all the currency pairs that we have said, the plan is solid. This one, it's not that solid. Why? This one is not that solid. Why? Why do I say this one is not that solid? Because of it has never reached the 38.2. It came close to reaching it, but it did not reach it. So what might happen is we might come and retest it, and then the follow through comes in. The truth of the matter is we are structured to the downside. That is why looking for buying opportunities becomes very tricky into this market, right? So with that being said, beautiful traders, if it does happen that we break like this is still another setup, but this will be breaking down with daily videos and weekly forex forecasts like this that cover a whole lot of aspects. Remember, during the daily videos we do not cover the daily analysis, we do not cover the daily structures, we just cover where to buy, how to buy, what happened, how to change or how to adapt. This is all that we'll be covering throughout the day with the daily analysis. So traders, that is it with the pound and the Canadian dollar. Nothing really is happening on this currency pair. Nothing is really happening. We are just stuck in a low volatility mind frame or structure frame. So without wasting much time, beautiful traders, let's go straight to the euro and the pound to weigh out and see why the euro and the pound, to see why the pound is relatively stronger against the Canadian dollar and the dollar, and see why the euro is relatively stronger against the dollar and the Canadian dollar. But overall, the structure is to the downside on both of them. So with that being said, let's go straight to the euro and the pound traders. So traders, with the euro and the pound, what we do have, it's a very simple setup. This one, it is a signal that is not confusing as much as it has the daily setup and the weekly setup. So I will get straight into this and chop it down with you. Remember, last week we were looking for buying opportunities, and this was a fantastic setup to the upside. Everyone was happy. So with that being said, beautiful traders, let's get into this. The first thing that we did that we would like to see this week is look for bullish patterns and formations around these levels, and to take out profit structure after we break this or make the new low, the new high from last week. Now, if we do come to this break below this weekly break of structure at 0.8770, then a pullback will be imminent, and we will be looking for bearish patterns and formations to the upside. Why do I always have two biases? That means I am prepared to adapt to new setups, to new waves. I'm prepared to take a loss and learn from it to always make sure that I stay making money in the market continuously and consistently. So with that being said, beautiful traders, this is simple euro and pound for you guys. Now, do you see why the euro has weakness against the USD and against the Canadian dollar? It's because the euro itself is beating the pound. So with that being said, beautiful traders, let's get to the last but not least currency pair, which is the US dollar and the Canadian dollar. Last but not least, the US dollar and the Canadian dollar. Now, traders, with this fantastic currency pair, what we are expecting right now is a small pullback from this level right here, either to retest this level of L, this level of, then a continuation to the upside, a continuation to the upside. We will not be selling this. I'm not looking for any selling opportunities around this currency pair going into next week, even though we might break. The only time that we will be looking for selling opportunities is if we break this level right here. And since we will not be breaking this level right here, I don't think it is very, very possible that we will go down here, since the Canadian dollar will be slow against the dollar. The overall direction that I'm looking for, or that I'm leaning towards, is the dollar strength and the euro and the pound weakness. So the Canadian dollar is only going to beat the euro and the pound, according to me and according to the data. It is only going to beat the euro and the pound because of the more weakness in the euro and the pound, rather than the strength in the Canadian dollar itself. I hope it makes sense, right? So traders, this is it, and that is it from me from today's video. Let's make sure that we like, we subscribe, and we fund our accounts and join Vinboss Signal Factory so that you get started right now and be free for the rest of your life. Thanks for watching this video, and have yourself a beautiful and a fantastic day going into the beginning and the middle and the end of this coming week.